Most global founders set up a US entity for a reason that actually doesn't apply to them at all. And they pay a very heavy price for it every year. Let me show you in a 3-step framework what it actually costs. And one biggest mistake that can cost you in more than $25,000 of penalties if you don't get it right. Hi, my name is Saif Nawaz. We're a global market entry consulting firm helping founders and entrepreneurs and professionals like yourself to grow and expand beyond borders across 21 jurisdictions. So let's get right into it. Firstly, let's talk about ownership. So as a non-resident person who's looking to set up their IT firms, digital marketing firms, freelancing service providing, any kind of D2C, Shopify, any kind of firms, you don't actually require to be a US citizen. And most of the professionals and the business owners who are looking to start it in the US get into that trap. Do I require a local person? Can I set up this entity or not? You can, absolutely can. US in itself is an $18 trillion market when it comes to services. It's a fantastic market. 1/3 of the global purchase happens in that market. So if you are thinking about US or you are already selling in the US, of course, you're in the right spot because the customers actually pay for it. Despite what you hear in this world today about de-dollarization, US power going down, China going up, and all the geopolitical issues, US is US. And you know that. The services actually sell. Goods actually sell. Customers pay for it. It's a big consumer market. So let's circle back to this issue of ownership. How is it that as a global founder, you can open a US company? And whether this US company, and I'll put you through a litmus test that is this company is actually right for you. Let's understand a little bit about structures. The first structure, what usually small business owners or any founders follow is setting up an LLC in Delaware. Go through. Let me make you understand the difference between 3 sort of entities that is possible in the US and if it's right for you or not. So an LLC, like a limited liability company, is a company which is a pass-through. And I'll come to that point in a minute. Then the other entity that you can set up is a C Corp. And that is suitable for companies and founders who are looking to raise investor capital, venture capital. And then there is S Corp, which is not for you if you're a global founder because it's only open for US citizens and US residents. So let's focus a little about LLC. Now, the most popular jurisdictions in the states, as you say, across 52 states, are Delaware, New Jersey, New York, Wyoming, Texas, California. These are the states that you can set up an LLC. But the taxation system, once the company is incorporated, you need to pay the setup fees. You do not need a registered address. You need a registered address, but your registered agent can actually set up the company on your behalf. They give you a registered address, and that is about it. But what you don't realize, the setup fees, and of course there is New Mexico also. The setup fees is $60, $90, $100, $200, and $300. And I've put a link in the description below where you can actually see which state requires what kind of filing fees, setup fees for an LLC. You can own 100% of it. And you can, the most important thing that you need to understand from setting up the company is that these LLCs require minimum annual franchise tax. So once you're set up, for example, in Delaware, you have to pay $300. In California, you have to pay minimum. If you don't make even a single dollar of income, you pay $800. So the jurisdiction or the state actually is up to you. The simplest way that is advertised online is to set up a Delaware entity, 300, 500,000, what are the dollars that you spend through a service provider? You can set up the entity. But that's not it. That's not it, my friends. You are the person who is setting up an LLC, right? The LLC is a pass-through entity and the taxation. So somebody asks you, what is a corporate income tax for an LLC in the US? There is no tax because since it's a pass-through, the actual tax of the company gets accumulated where you are a tax resident. Let's suppose you're an Indian founder or a UAE founder or an African founder or an Asian founder setting up a US LLC in Delaware. You pay the minimum franchise tax, but the point nobody is telling you at the moment, and nobody gives a damn about it actually. Nobody actually cares about it, that what happens to your taxes. They just give you a SaaS card, you do a subscription, they take the money on the roll from you, and then you get a big credit card charge every $300, $500. Nobody tells you that. Now, the most important thing that you need to understand that if you're an Indian tax resident, the entire money that you make in US is taxed in India at your personal income tax. Luckily, if you're in UAE, there is 0% personal income tax. But the entire money is actually charged. That's the biggest point that you need to understand about a US LLC. It's a pass-through. So the owners actually pay the tax on the entire income. Okay. Of course, you need to abide by the sales tax rules and local laws in selling and total compliances, but that's the reality of it. Now, where do you choose to set up this entity is actually up to you. Now, if you just have no operations, let's say you just need this entity to show branding and marketing purposes, there are other solutions in the market, right? If you just, and the point that nobody tells you that the US LLC is actually, is easier to set up, of course, because, they'll just take your money. The biggest point nobody is telling you is the banking, right? To set up the bank account. So you need to have a local SSN or TTN or, that kind of numbers, social security numbers to actually open a bank account. And the second thing that you require is an EIN, Employer Identification Number. That's the IRS giving you a corporate tax number, right? So this is what you need to start invoicing to your customers. Now, the banking is, of course, a challenge because AML, KYC may be required if you don't have an SSN. It's absolutely free to get an EIN number, firstly. Okay? So the framework starts with the ownership, goes to the second tier of compliance, what you need to do after setting up the entity. First, finding the jurisdiction. And I'll put it all together. I'll round it up. So I'm just giving you a lot of unstructured knowledge and giving you a structure. So first of all, LLC versus a C Corp versus an S Corp. S Corp, let's exclude that. It's for foreign ownership. LLC is a pass-through, right? And LLC, your tax residency matters because you attract the complete tax. If the taxman comes ringing on your door, you own a company outside, the entire is taxable, and it's possible because of the data sharing across the globe now, which is a normal standard. You get taxed. You get taxed with the entire thing. Second thing is the compliance part, right? You need to register for the employer identification number, the social security number you need to have for the banking. You can, of course, there are solutions like, online banks, which you can open, which is good enough, fine. But, if you're talking to a faceless person and the money gets stopped, that's up to you. I'm not telling you to go and actually open an online bank account or a high street bank account. That's up to you. JP Morgan Chase, PayNeed, the guys will take your money, but will they transfer the money? That's up to you. The most important thing that you need to understand is the EIN number, discrete. Of course, you can do it yourself through a service provider. That's up to you. Finding a balance between what state you want to set up the entity and where you want to start invoicing from, it actually matters. Because if you're, for example, set up in Delaware and selling your services, let's say in California, then California government sees you as a foreign entity for some reason. We are Americans, we have our own rules, the Wild West sometimes. And if you understand that there is a minimum requirement to do sales tax registration as well. So you can be sales tax registered in Delaware. For example, if you're selling goods, you can register yourself a sales tax permit, for example, in Texas. It's possible. It's possible. But you have to do the filing. And the stuff that nobody tells you about are the kind of tax forms and the annual compliances that you need to do. Setting up is a small cost, but that cost has a lot of, and say, can of worms underneath it that you want to open it or not. And I'll tell you what is the pivot point where you should be actually looking at setting the entity and the structure. So once you are set up, the annual compliance of those entities is another thing that you need to keep that in mind. And I'll tell you exactly what forms to fill. Okay. And the point that I said in the beginning, the biggest mistake that you do is not filing your federal tax returns or federal filings, and they call it in the US, which can cost you $25,000 of penalty. And there is a deadline for it. The form that you need to file, because these are big numbers, that's why I have to look at my screen, is Form 5472 is what you need to file every year, right? And along with that form, you need to file Form 1120 every year. And if you fail to file these forms with the federal tax department of US, you get fined $25,000. And they come after you. US is US. You can set up. If you don't do it, you cannot do business if they find you that you're doing business to any other states, because the whole data is collected at one end. Right? $25,000. I have like clients walking in to say, like, we set up a company 3 years back. We haven't done anything about it. What should we do? I was like, pay $75,000. It's like, what? But that's the reality of it. If you think US is a market for you, then the thing numero uno that you need to do is to think about federal filing. And no SaaS, no online business, no Delaware registered agent will tell you that. You can say, like, but I did not do even $1 of invoicing. But you got to still, file those forms. It's important. Nobody will tell you that. And the deadline for that is 15th of April every year. So even if you set up the entity in January, it's still there. So the deadline is 15th of April. And there is an extension that you can file, which will give you a small extension. It's a Form 7004 is that you need to file for an extension. But it just delays your filing requirements, let's say 30 days, and depends on IRS, how much are they willing to accept as an extension. Because if you go in US, everyone is, and all the CPA, the chartered practitioner accountants, are going crazy. I mean, you can spend, the actual filing cost is $1,000, but you can end up spending anywhere between $3, $5, $7, $10, $20,000, depending on how much business are you doing in filing annual returns. You can get an extension. Don't miss the deadline. That's the, fact number one of US. And there is also other forms that you need to file. No tax liability forms. For example, if you're doing a pass-through entity and you were actually paying and doing the tax credits from your home country, then there's a form of Form 1120. So there is a lot of forms that you need to take care of. And then let's come to the sales tax part of it, right? So there is different states have different sales tax numbers. The problem is that every state is semi-autonomous in the way that they work. It's one country, but it's a federal system and a state system. So you need to file, if you're having different sales tax numbers and resellers and sellers permit, you need to do 50 state filing. 45 states plus DC, Washington, DC, actually charge sales tax. And there is a minimum threshold before of actual revenue and the sales that you do. For example, most of the states have a $100,000 minimum threshold. So let's say that you are invoicing for more than $100,000 in that state, then you need a sales tax number. But there are a few states like New York, no, you know, New York, yeah, Texas and California, the three most popular states that, global or Asian founders actually find attractive because they have a lot of family relatives who have moved and, started their great American dream over there. So it's quite easy for you to open the companies there. But the minimum threshold in these states is actually $50,000. So $50,000, you reach that revenue, you reach that sales, you need to register for the sales tax. And those are the points that you need to understand about the compliances of running a US company. Now, I come to like, Seth, what is it that I can do? Let me set up a C Corp. But you need to understand something about C Corp also. So I've given you the compliances of an LLC of running a company. The state actually matters more. So you are thinking where you want to do. One state is better than the other. If you're doing good business and if your litmus test tells you that you are doing revenues not $50,000, $100,000 a month, yes, it makes sense. Otherwise, just get a US dollar bank account and invoice them from global. For branding purposes and marketing purposes versus actually opening a small little entity and start invoicing you from that. And, some of you are already having a US entity and you must be having a CPA. But these points are very critical for you to also understand that what are the compliances? What is your home country charging you? And what is the permanent establishment of the company? I'll give you an example. If you set up an entity as an Indian founder in the US, you have to do declarations under RBI, Reserve Bank of India, FEMA, FERA Acts, where you have to do APR, annual performance report filing, annual yield 31st of December. You need to do FLA filing from, foreign liability, asset ownership in under your personal income tax returns. You need to send the capital, get the TCS, deduct the TPS and the TCS, and then reclaim the TCS after a while. So there's a lot of liability. And then you have to report every year. The financial year in India is April to March, but in the US is the actual calendar year, which is January to December. So you have to have an interim audited balance sheet, which your banks accept, which is an authorized dealer. So it's too much to take in. So there is a lot of compliances. We structure it. We tell, and I've given a roadmap to it, a framework to it, what are the importance in the description, what you need to be in this. And my whole idea of actually coming out here after successfully setting up more than 1,500 companies globally for founders. I personally oscillate between our offices in India and Dubai, primarily in Dubai, but yeah, and the company is of course headquartered in the Netherlands. It's most important for you to understand what you're getting into before you get into it. Because retrospectively, it's a deal breaker. It's a big headache if you're a small business owner. Now, coming back to the topic of C Corp. The C Corp is good for clients or customers or people or founders who are looking to raise capital. Reverse SPAC, and I want to list my company in S&P 500, NASDAQ, raise private equity, venture capitalists, angel fund, the big old US capital market that we want to acquire. C Corp. But there are certain forms. What you need to understand is what's the authorized capital structure share? How many shares do you do? How do you dilute those shares? So simple thing, if you're an entrepreneur focused on US, want to operate in US, not from, Timbuktu or New Delhi or Mumbai or Dubai, then I think it's better to go for C Corp. Because the first thing your investors will ask on your term sheet is set up a C Corp in Delaware. Simple as that. So it's a no-brainer. And don't get confused. Somebody tells you open a C Corp. It doesn't make sense for you to set up anything else. Because LLC is just a pass-through. It's you basically representing the company, masquerading as a company which is billing to the customers. I hope that makes sense. So for this message, I want to give it a close to this particular topic for today. I hope this has helped. Do come back to it. I think for cross-border structures and making you a global entrepreneur, as I've been helping a lot of founders, there's no marketing. This is not a sponsored channel. We don't want no money. It's just to tell you how you can grow and scale your business with confidence. But the most important thing is you need to focus on your core, and you need to be aware, whosoever your advisors are, that this is the most important things to take care of while setting up the entities, doing the compliances, making sure that you're on the right path, and understanding what your tax residency is. With this, thank you so much, and I will talk to you very soon with another useful global structure very soon. Thanks.